Hi everyone, thanks for joining the NexGen Energy webinar. Just before we begin, I'll caution that the presentation may contain some forward-looking statements, so you can check those disclosures out later on the company website if you're interested. Joining us today is Lee Currier, CEO of NexGen Energy, and Travis McPherson, SVP of Corporate Development. The company has a track record of success in the uranium space and has brought its Saskatchewan asset from a speculative exploration play to the biggest yet to be developed uranium asset in the world with an NPV of $3.7 billion. The price of uranium is obviously a very strong topic recently, and the stock's done extremely well in the last few weeks, but I think there's still a lot of upside from here. This week, NexGen's also announced a US $30 million financing and some additions to the team. So after the presentation, we'll discuss these recent press releases and open up the conversation to some Q&A. If you have any questions, you can email them through our info@adcap.ca or send them in through Zoom. And so with that, I'll let you guys take it away.
Thanks, Tina. Much appreciated. Look, welcome everyone to the call, and it's an absolute pleasure for myself and Travis to be representing NexGen with Adelaide Capital today. I might just start and briefly introduce myself. I've been in uranium since 2002, continuously right throughout that period, and I've gone and seen just about every material uranium project that exists on the planet. And so we've also, during that time, I've been in in a uranium market in 2004 through to 2008, where we saw the price of uranium rise from $10 a pound to $140 a pound. And as Tina pointed out, uranium has started again. That the market is on, and we've already seen the price of uranium go from $23 a pound to just under $34 a pound in a little over 4 weeks, and it really does show you just how bare the cupboard is of available supplies. And the difference between today and what it was back in 2004 to 2008, where we saw that price rise from $10 to 140, is that the top 5 mines in the world that were in production between 2004 to 2008 are no longer in production, and the price of the cost of production worldwide today has gone up, and the current spot price, even with it rising from 23 to 33, is still nowhere near at a level that can just sustain current production levels, let alone add production to fill the supply deficit that is upon us. So we might just start with a little bit about NexGen, and then I'll hand over to Travis, who's the expert on the market, to go into a lot more detail. But NexGen Energy, it was founded in 2011. I started it right after the incident in Japan, and because I always have thoroughly believed in the benefits of clean energy, but also the fundamentals of uranium. And I was incredibly confident that the world was going to continue along a clean energy environment, and nuclear is now, and not to take any thunder away from Travis, but nuclear energy is now at historical high consumption levels. And so, back in 2011, I knew that was coming, and so I basically used that previous 10 years of experience looking at uranium projects right around the world, and focus the energy into northern Saskatchewan, where if you do make a discovery, it's going to be high grade and high tonnage. And we're very fortunate on Valentine's Day, actually in 2014, February 14th, 2014, to make the Arrow discovery. And you can see there on that page, that's our land position. It's most dominant land position in the southwestern part of the basin. And it currently hosts over 350 million pounds of 43101 compliant resource. And it's very quickly developed into one of the, the best uranium project in the world to be developed when you take into account its size, its incredible grade, but also its very unique and simple technical setting. It's in competent basement rock, and it's got a very clean metallurgy. So without too much, giving away too much more of the rest of the presentation, I might just hand over to Travis to get right into the market.
Yeah, thank you. How do you change the slide here? Yeah, there we go. Maybe go down to the market section. A couple more slides down. Perfect. Yeah, so I think, I don't need to walk everyone through. Everyone on this call, I'm sure, is aware of, the demand side of the uranium picture. But effectively, there's a huge demand in the developed world and a growing demand in the developing world, particularly in China and India. And, really, I think why we're all on this call today is given what's changed as a result of COVID. And COVID, importantly for uranium, COVID is only just exacerbated the existing underlying issue that has always existed or has existed really since Fukushima, where there's been a horrible bear market in uranium for almost over 9 years now. And, you've seen everything that happens in those types of bear markets where the price of uranium is well below the incentive price to maintain current levels of production, invest in new production. And so you've seen supply destruction and deterioration over that period of time, and particularly since peak production in 2016, where 2016 to just prior to COVID, we had about 35% of mine supply come off the market as a result of economics. And, all COVID's done is really just exacerbate that further by taking off an additional 15% roughly in the market, assuming a 3-month shutdown of these mining operations. And the other thing it's done is really kind of shone a light on the supply chain and risks around the supply chain, not just in uranium, but across industries. And, from a Western utility perspective, it's a pretty risk supply chain given the reliance on, or there's a very high concentration in where uranium supply is coming from. And that situation is one that obviously is very risky for a strategic commodity like uranium, where the price of uranium actually doesn't matter nearly as much as the security of supply when you need the uranium. If you're running a nuclear power plant, you don't really care that much what it costs, but you do care that you have it when you need it, and you have a very stable supply of it. And that's obviously something that's been highlighted prior to going into COVID, but COVID's just exacerbated that issue. So I think that's probably really the crux of what we want to touch on, is that even whenever COVID does normalize, the market has shifted now, and the sentiment has shifted from one of complacency to one of looking at that security of supply. And whenever COVID normalizes and any of these mines start opening back up again, it won't impact that underlying fundamental shift in psychology from the end users and from the industry.
Very, very, very good, Travis. And look, a lot of people have been long and wrong on uranium, and that summary by Travis is very, very accurate. But that's been the history of uranium. Even leading into 2004, the price of uranium had been flat between $7 and $10 a pound for about the preceding 5-year period. Then there was a supply scare. Coincidentally, it was just off the back of SARS in 2003, and then some mine failures. And that's when the price went from 10 to 140. Because as Travis said, it's not the price of uranium that's important to utilities, it's the fact that they want to have it physically and secured. And so when you get these supply shocks, it's like everyone trying to run through the door at once on a Thanksgiving Day weekend sale. They all got to get there. And so that is the talk in uranium. It's a very unique feature of the uranium market. And to see the uranium price just in, over 4 weeks recently go from 23 to just under 34, it shows you how bare the cupboard is with respect to available supplies. And so we think we're in for a very prolonged period of sustained increasing prices, because we know that the cost of production worldwide is far higher than it is at currently $33 a pound. That's just that slide there, just with the pie chart there, is showing to Travis's point, which I might let you speak to, Travis, about the reduction in pounds over the last 4 years.
Yeah. So that just gives some more details in terms of what I was speaking about in terms of the closures as a result of, or closures and secondment of uranium out of the market, both from financial players, but also mines shutting. And obviously, again, a 9-year bear market does a lot of damage. And, really, uranium's always a bit lagged relative to other commodities. And that's because there's so much of supply that's under a long-term contract basis. So when you see spot prices come off, if you saw that in oil or copper or something, you'd see a supply response relatively quickly. It always takes longer in uranium. And it's also true on the other side of it coming out. It always takes longer for supply to react to rising prices because uranium mines do take a long time to develop and get into production. So, and so really, you can see there, it's just a significant amount of supply that's come out of the market. And again, I think the key there is COVID has just exacerbated the already existing supply issues that, to Lee's point, in our view, we're off the cliff, so to speak. This isn't going to be fixed quickly or easily, even with, very high prices. It's going to take time to balance supply. And we are in a very structural deficit today and for the foreseeable future. Yeah, and really that's just kind of talking about, how does it all resolve itself? And it resolves itself with a contracting cycle coming back, which we are in the very early days of doing. But that is basically utilities have over the last 8, 9, 10 years relied on existing long-term contracts that were signed back predominantly in the last cycle leading up to 2011. And, the average price in those were about $60 to $70 unadjusted for inflation at that time. And that reflects the cost of mining a pound of uranium on average, is that price. And the only reason why you saw the price after that go down to like $17.50, I think was the low, is because you had all the material, most of the mined material was already selling at much higher prices. So now that they have to come back because there's no spot material available, there's no carry trade available anymore, and they're out of inventories for the most part, or they're at inventory levels that they don't want to go too far below, they have to sign new contracts. And in order to do that, they have to incentivize mines by giving them a price that covers their cost of production, covers their all-in cost of production, covers their cost of capital, and gives them a return. And, we think that on average, you're in that same order of magnitude, if not higher, in terms of where the market needs to be in order to stabilize a supply and demand equilibrium, which we all know, it's never perfect, especially in commodities, and it will likely overshoot in our opinion. Yeah, that slide there just shows that, we've seen the early indicators pointing to this cycle turning. And, it started with SWU, which is one of the components of turning uranium into nuclear fuel, in July. Then October of 2019, you saw conversion rising dramatically. And then finally, you've seen uranium coming out of its long-term consolidation and bottoming out phase. And, it's up materially over the last 6 to 8 weeks. This slide just speaks to the differentiated and strength of Arrow. It's, not to say that we're going to sell at any price, but we have the potential to break even well below any and withstand any kind of economic environment. And really, this is important for our community partners, our regulator partners, to know that, hey, we're going to be in production. Once we go into production, we're going to stay in production because this project is so resilient.
It also shows the sharp torque that you get in uranium when there is a supply scare. And 2004 to 2008 there certainly shows it. just moving into the Arrow project, actually just on that page there, that is a picture from our world-class core processing facility. We've been visited by a number of mining professionals from around the world from very large companies. They've all heard about this core logging facility and its elite standards, and that's a picture of it. And basically through that core lab, we've had approximately 400,000 meters of core. Every meter is analysed, and it's an absolute pleasure for any budding geologist who's come out of university, of which we have a number of them. They're in no better learning environment, because within moments they can call up any meter of that 400,000 meters of core and look at it and compare it to the sample that they're looking at right in front of them. So it's a fantastic facility that operates all year round. But the takeaway is that the quality control and assurance around our data is at an absolute elite level, if not setting the standard. And it's something that the company is very proud of. But that is just one example of everything we focus on. We have an elite standards mentality and philosophy at NexGen, and that's just one of the examples of that philosophy. So just moving on to the next page. Thank you, Tina. Yeah, and this here really does characterize Arrow as a top tier asset, and it's purely a function of its technical characteristics, but also its sovereign location. We're in Saskatchewan, northern part of Saskatchewan. It's ranked as the #2 mining jurisdiction worldwide for developing and operating a mine. When you consider as well Cameco's long historical production history in Saskatchewan, it tells you it's the ideal place in order to develop and operate a uranium mine. As Travis alluded to on that previous graph, Arrow is at the bottom of the industry cost curve. It's impervious to any movements in the uranium price, and it will be in production. It will be a multi-decade project, no doubt about that. But with respect to the PFS, we did it on just the indicated resource and on a 9-year mine life. And you can see by that box in that middle chart there that we're only incorporating on the PFS at 3.7 billion NPV, after-tax NPV that Tina mentioned earlier. That's only on a portion of the resource. And you can see that there's so much more resource there that we haven't yet taken into account. And the resource, as stated, is still growing in every direction. We really feel that we actually haven't hit the actual mother lode yet. We feel like we're on the fringes of a much larger system. Although Arrow is already at 350 million pounds, which makes it one of the largest and highest grade deposits worldwide. In terms of production, based on the PFS, Arrow will have the capability of 25.4 million pounds of production on average over the first 5 years. I want to really state an important point here. That's its capability, and it's actually from only 1,000 tons per day. So that's probably, like, to give you a perspective of it, it's probably the average size dining room in a house. It's about the 4 dining rooms, and that's the only volume of rock that would be moving per day, but it would account for about 25 million pounds per annum. The beauty about Arrow is that we can turn the production up, we can turn the production down in light of the market without incurring ongoing operate or substantial care and maintenance costs. So whilst it's technically a very strong asset, it's also a very nimble asset, and we will be producing in light of market conditions at the time. Our analysis, though, on the market in terms of the approaching supply demand deficit is actually the world's going to need more than one Arrow come the middle part of this decade. It's going to need 3 to 4 Arrows. And so we don't think 25 million pounds per annum is actually too much for the market at a time when we will be heading into production. But the beauty about the mine is that we can turn it up, we can turn it down if need be. Just moving on to the next slide there, please, Tina. Yeah, just some of the impressive economics that Tina mentioned at the start of this call. It's got an after-tax MPV of just under $3.7 billion. It's got an after-tax IRR of 57%, and we're using a $50 a pound uranium price here, which we already know there's some long-term contracts being signed above that price. So we think $50 a pound over the life of this asset is actually very, very conservative. Remembering that in the last cycle, the most in 2004 to 2008, most of the long-term contracts were done at between $60 and $70 a pound, which I think does represent the true cost of production. And yet, as I said, the top 5 mines that were in production at that time are no longer in production today. So we think, you know, the average long-term contract is going to be written at actually higher prices than $60 to $70 a pound in this approaching cycle. And so that's why we think $50 a pound is ultra conservative in our numbers. I've already spoken about the operating costs, and that would be, you know, the lowest in the industry. I just want to make the point, part of our philosophy is elite standards, and I think we're coming up to the next slide here in a moment, Tina, if you don't mind. Sorry, the next one. I skipped a little. Sorry, the next one, if you don't mind. One after this. Perfect, thank you. One of the aspects that, as I said, elite standards in everything we do, and it also environmentally, we want this to be the world's leading environmentally managed mine in the world. And part of that aspect is we're pursuing an option to have the tailings management underground. We have the technical setting to do it. We've been doing a lot of testing over the last 7 years with respect to not only the deposit, but the geotechnical, the hydrogeology, the water flows, absolutely everything. And every testing that we've done over that last 7 years has said that this is optimally the process to pursue. What that does, though, is it's not the cheapest option economically. It's actually going to add to the OPEX by about 21%. But what it demonstrates is an elite standard of environmental management. It does have higher OPEX, but this project can completely sustain it. And even with that increase in OPEX, we're still at the lowest end of the cost curve for any mine globally when going into production. So it's important that the investors understand, you know, not only the economics of this project, but the philosophies of the company. And we're looking to set the standard both in terms of the economics, the environmental mine management, but also what we do in the community, in partnership with the community in and around the project area for the province of Saskatchewan and the entire country of Canada. Maybe just, yeah, so that brings us on to the next point in terms of the social benefits of Arrow. And here's just a couple of our programs that I'll mention, quite a few programs. We were recognised in 2019 by the PDAC as the leading Canadian company anywhere in the world for our environmental and our social community programs. And so we have, from an education perspective, we have a summer student program since 2016. 6 of those students are now on full ride bursaries at university on behalf of NexGen. They also come back and work in the company during their downtime from university. Health and wellness. Every child in Loche, in the 4 schools there, gets a healthy meal every morning for breakfast, and the benefits of that has been seen in lower absentee rates, but also higher marks. And it's something we're very proud of. In that picture there, you can see that the Mayor of La Loche, Robert St. Pierre, we've also the Premier, Mr. Scott Moe, in there as well, serving breakfast club. And just on the next page here, you'll see at that function, the Prime Minister, Justin Trudeau, came to La Loche and acknowledged NexGen's great work in the community with respect to our programs, which aren't just health and wellness and education, it's also economic capacity building. And we have absolutely optimized as much employment locally as possible, and we'll continue to do so. And as the project develops even further, we've got a local first policy, and it'll just be an extension of that 7 years of work and working together with the community that we've done so well and in such a genuine nature. And it's absolutely a pleasure to working with the local community. But we also have acknowledgement by the Prime Minister of the good work that NexGen's doing on that front. Just some government revenues as well. Obviously, they will be taking their slice, and so they should. And so the benefits, not just what NexGen's doing directly, but also indirectly through generating government revenue, will be extreme. You know, there's 5.4 billion in total government revenue just over that 9-year mine life. But as discussed, this is a multi-decade project. It's going to be much more substantial than that. But directly into Saskatchewan, 3.9 billion. So it makes it one of the province's, most profitable but also actionable projects, given its relative simplicity for a mining project and the small scale of it. But given the grade of the deposit, the output's going to be enormous. Yeah, just going on to the historical and share capital there. As you are aware, we're listed on the New York Stock Exchange, but also the TSX. Majority of the trading is on the TSX, but it's basically about 60-40 TSX NYSE on any given day. We have 361 million shares out. We have an impressive list of shareholders down the right-hand side there. We've got CEF Holdings, Li Ka-shing. They have about a 20% ownership of NexGen. We did that transaction back in June of 2017. And what's unique with that transaction was we had the voting rights surrounding that share ownership. So they support government, they support board and management resolutions that are presented to shareholders. As Tina mentioned right at the start of this call, we did another financing yesterday with Queen's Road Capital, which is a fund with a very close relationship with Li Ka-shing, run by Warren Gilman. And that is a fund who's backed by a number of Australian high-profile billionaires, one of which is Andrew Forrest, who runs Fortescue Metals. It's a $38 billion company. They have elite standards with respect to their community focus, and they are very, very proud. The Queen's Road Capital investors are very, very proud of the association with NexGen and the work that we're doing in the community on top of this world-class asset, because you can have a world-class asset and Mother Nature influences that, but what are we doing as a group, as a management group? And we are very focused on optimizing what we can do with respect to that project, and those two shareholders in particular certainly appreciate our focus and our delivery on all of our objectives. Mega Uranium, foundation shareholder Richard Patricio is on our board and has provided outstanding support right throughout the entire history of NexGen. The next group, Copperneck, Segra, CQS Management, are all the who's who of Empyrean and Murray, are all the who's who of resource investment. And we're very proud of that share registry and of all our shareholders. I know there's a number of high-profile retail investors that are listening on today's call. who've been in the stock for over the journey, and their support has been absolutely outstanding. Yeah, I might let Travis speak to this this slide as to our actual performance with respect to the in the context of the market.
Yeah, look, this slide just kind of shows that, you know, we go around well, prior to COVID anyways, we spent a lot of time meeting face to face with a lot of investors around the world, you know, taking the time to get to know them getting to know our story. And, you know, I think that we have undeniably, as Lee showed, a very robust shareholder registry, and that pays dividends when the sentiment improves. We perform very, very well relative to our peer group and mining equities as a whole. And, you know, you can track that during very defined periods when sentiment changes. And as we all know, in uranium, there are definitive moments where sentiment flicks and it changes. And you know, we've gone back a number of times consistently where basically with the uranium market, if it's flat, we kind of trade in line or around in line with the peers. Sentiment improves, we perform very well. And that's no surprise given the quality of the asset and how we're developing and the shareholders that we have. So. And then this is just kind of shows the graph and some of the historical milestones that we've done, you know, going back from, as Lee said, in February, Valentine's Day 2014, making the Arrow discovery. You know, as you can see, sometimes markets stay irrational a long time, and we were kind of flat for a number of years. And then we came out with a maiden resource estimate in March 2016, which shocked the market. You know, consensus, most people thought we had, you know, under 100 million pounds. Well, we came out with over 200. Shortly thereafter, after spending about a year with the CEF group, we announced our first deal with them. We spent another year drilling off the resource further, both in terms of infill, but also expansion drilling. We're able to convert over 90% of the indicated, grow another 100 million pounds in total resources. And then at that time, given how much it had expanded, we needed to expand the funding base. And so we did another transaction with CEF again, with all the terms and conditions that Lee was referring to earlier. We announced our maiden PEA that included an updated resource estimate, kept drilling, kept de-risking the asset, put out a PFS in November of 2018, which was completely consistent with the PEA. The only difference is when you go from a PEA to a PFS, under NI 43-101, you can't include inferred resources. That was the only difference, but everything else entirely consistent, which is obviously pretty rare. And then in March of 2019, the former premier of Saskatchewan joined the board, Brad Wall. We started the environmental assessment process formally with the acceptance of our project description under SIA 2012. Basically worked throughout the year. We did a big drilling program to get basically the PFS mine life, the first 10 years of mine life, into the measured category. So effectively completely drilled, completely de-risked, completely understood in all senses now. And then at the end of the year, last year, we signed 4 study agreements with all of the local communities, which was fantastic to see. And then this year we've just picked up where we left off effectively, and we're finishing up the feasibility study, finishing up the EIS. Obviously, COVID has shown itself and put a little bit of a damper on some of those activities that are just logistically challenging to do in that context. But we're still progressing on a lot of things right now and going really, really well.
Yeah, and so thanks, Travis. And so during that period of all of that hard work over the last 7 years, when the market hasn't been on, we've been building what is the go-to asset in uranium. It's in Saskatchewan, it's technically simple, and it's got incredible economics. And when you add on top of that, our focus on the communities as well, and working in partnership with all of them very, very successfully, we are completely primed for the final piece, and that is the market in uranium to go from to be that final piece of the pie, so to speak. And in a rising uranium market, we are very, very well set for that. And Travis's graph and shows that whenever there's a positive momentum in uranium, that we are the go-to name. Just for a bit of history here, back in 2011, the total uranium equities in the world amounted to about 150 billion market cap. At the moment, it's 15 billion. But we think this run that we're moving into, given the state of the supply situation, we actually think it's going to be bigger. Got a lot of news coming out in the balance of 2020. As Travis said, we're working on the final stages of our feasibility study. We're compiling a lot of the environmental work for inclusion into our environmental impact statement. I just want to give a bit of a nuance there. These documents that we're currently working on are the function of the past, since February 2014. Well, it actually goes back before that, back to 2013. It is a function of the last 7 years of work, and that work has been entirely consistent throughout. That was also reflected in the updated resource statements, but also the initial PEA in 2017, the PFS, which confirmed and validated the PEA in November of 2018, and the FS is going to be no different, and that feasibility study is going to be fed into the environmental impact statement. It is really, we are at the back end of all of that 7 years of work, which has been completely consistent, which we've been working with the regulators on throughout. So the submission of our EIS, feasibility study, and our EIS is really the formal document which reflects all of that good work that we've done over the last 7 years. So we've worked very, very hard at it, and I've gone through a permitting process previously in South Australia when I started in uranium in 2002, and I'd have to say, as per my accent, I'm from South Australia. There's no denying that. But the regulatory framework down there is very, very good, and we were very successful. But it's far more complicated as well than it is in Saskatchewan. What I've found in Saskatchewan is not only is the framework very clear and understood, the history of uranium in the province for over 30 years, but the actual government and their disposition towards encouraging exploration development and mines going into production, I think is second to none. And as I mentioned earlier, there's not a material project in the world in uranium that I haven't gone and visited personally and assessed from a technical, an economic and a sovereign jurisdiction perspective. And I've got to say, Saskatchewan is the best sovereign jurisdiction for uranium. We have what I think any objective independent person would attest to as the go-to uranium project globally, and we're very well set up for this next stage of the company's development, just as the uranium price is really starting to move. And it's very early in its life. It's very early, let me tell you, to where it's going to end up. So we, for all our shareholders who are out there listening and potentially new ones, I very much appreciate your support, but also your interest. So I might hand over to Tina and Deborah for the Q&A.
Thanks, Lee and Travis, for the presentation. Yeah, it's a really interesting time in the uranium space, and obviously with the price moving up in the last few weeks, I think what's on investors' minds is, did we miss the boat? And NexGen stock has more than doubled in the last few weeks as well. But as you highlighted, the historical pricing of uranium is way above the highs where it is now. So I think there's still a lot of upside to go, and we've done a lot of development work over the last few years to add value to the project. So in my opinion, from a long-term view, there's still so much value and money to be made in the stock. So thank you for the presentation, and yeah, it's a great story.
Thank you, Tina. And look, for the viewers out there, Tina's been across it from the very early days, and as she said, not only has the uranium price been a lot higher in the past, well, so is the NexGen share price. Li Ka-shing's average entry, or the CEF holding one, is about $3.30 Canadian. Our share price went down as the uranium price went down, no doubt about it, and we went into that period of focusing on development and permitting, and we continue to be focused on that, but we're coming out of it. And I think there's all of that work that we've done since Leakash CEF entered at about $3.30 hasn't gone away. It's actually in the bank. And with a rising uranium price, I think the value of that good work is soon to be realized. And I think we're going to see that realization in the near future.
Yeah, for sure. So we do have the Q&A open. If anyone has any questions, feel free to ask. Why don't we just start off quickly with the financing, though? You'd already spoken about it a little bit, but with $40 million in the bank already, what was the motivation behind doing the financing and the use of proceeds?
Yeah, one, to beef up the treasury. We are very conscious of what the programs that we're doing and what we could be doing. We have got a lot on pause at the moment, but we've got avenues when the business environment returns to normal. And, we've got 90 million pounds of inferred resource at Arrow, which I showed you on one of those graphs, which we could, for $15 million, bring into the indicated category and probably, add materially to that 3.7 billion NPV. That's one aspect. We could get advanced early surface works as well at site. So, yeah, there's no shortage of things that we can spend money on appropriately, but we will be very much focused on waiting for the business environment to return to normal before we start any of those aspects. One of the things with the financing, which I think is very, very important, that a lot of investors should focus on when looking at exploration and development companies, is like the ratio of exploration and development spend to the company's G&A. Yeah, ever since we started drilling, that ratio is over 13 to 1. $13 going into the ground in exploration development for every $1 of G&A. I know, historically as an accountant, we are on top of the charts on that aspect. In terms of dollars spent per pound discovered, it's one of the lowest, is the lowest for a uranium resource over 100 million pounds. So whilst, we have raised significant sums of money from the world's leading investors, part of that reason why we're able to do those strong financings is because we've got a highly optimal use of capital, and those investors are very, very confident in NexGen with respect to knowing that their dollars are getting put to good use. And so, that's also part of the strong financing that we have done.
Some of your comments on the potential upside segue nicely into one of the questions we had from the audience, which was, do you foresee drilling taking place post the feasibility study? Will you be focusing on just going through the development of the current asset, or will you be continuing to look for some of that upside?
Yeah, it's a good question, and it's always a bit of a teaser. We have, for the preceding period, have been focused very purely since July 2019, where we ceased our big feasibility study drilling program. It came to an end. We'd completely drilled out that section of the resource. So there's no more drilling to do. We have been focused on the permitting side and the feasibility side of bringing all that information together and putting it into a document. As I said, we've got 90 million pounds of inferred resource we could easily convert to the indicated and create a lot of positive impact on the NPV. But as I also said earlier, we really don't feel like we got a really good understanding of Arrow from a global sense. I think we are very much just skirting around the edges of a much larger system based on the geological work that we've done to date. And so we're constantly teased with, balancing that perspective of advancing development and running parallel geology. I think you might see after feasibility and submission of the EIS that we may start doing some more drilling in and around Arrow, but also extensions of Arrow along trend, because just on the Patterson Lake corridor on the property, we've only drilled, maybe tested 10% of the total corridor that we have, and yet we host the world's best deposit. You know, I think, you know, our geological record speaks for itself. You know, Andy Brown, the founding, the vice president of exploration, who I'd worked with for many years prior to NexGen, he's constantly bugging me saying, you know, there's no way you've explored this fully, and to think that Arrow's sitting there all by itself, yeah, it just doesn't make any sense. So yeah, it's something that we're constantly wrestling with in terms of our size of our treasury, advancing permitting and development, but also, you know, we've always got that beautiful geological pressure in the background that we can easily commence if we feel we're getting rewarded for it in the market.
And you addressed this already a little bit in the presentation by saying we might need 3 Arrows kind of further down the road, but obviously that's a huge amount of supply coming online. How do you expect to manage the supply and throughput in order to optimize pricing going forward?
Yeah, look, if we were to produce Arrow right as today and just dump that on the market, yeah, it wouldn't be intelligent economically. But, you know, our forecast is that the supply gap gets very, very large in the middle part of this decade. And so to clarify that comment, all I'm trying to convey is, you know, 25 million pounds might seem a lot, but we don't think it seems a lot in the context of the market when Arrow's going to be going into production. So I think the market is going to be very receptive to a lot of uranium coming on board, given that the demand keeps growing and supply keeps coming under even increasing more and more pressure.
Mm-hmm. And you put out a press release this morning about appointing Tony George as a Chief Project Officer. Do you want to tell us a little bit about that?
Yeah, sure. And look, that's been a function of about a 12-month search. It's very, very good timing for us because we're coming into the finalising feasibility study, also the environmental impact statement, and then we'll be going into detailed engineering. And Tony's got an ideal resume in terms of the experience across feasibility through to construction and operation. And so we're very, very, I would say, picky with respect to who we were looking for. And Tony's got excellent experience and also unbelievable track record in delivering projects on time and cost. And you know, we're incredibly excited to have Tony join the company after a 12-month search. And you know, he's got a fantastic proven track record. Anyone can speak to any of his former employers. They all speak glowingly about his dedication, his ability to work with teams, his ability to work with governments and communities also. So I think he complements very nicely all the work that we've done to date. He's now got an opportunity to put his thumbprint on it. But also I think it's a tremendous fit culturally with respect to who we are at NexGen. Look, we are pushing, we're really dedicated. We live and breathe this. And so, you know, NexGen's only for a certain, you know, type of personality or caliber of professional. And we make no excuses for that. We're working on a world-class asset. We've got a project that thousands of people are going to benefit from, and we take that seriously. And it's not easy at times. It's not, but we love it, and we wouldn't do anything else. And I think Tony's personality trait certainly fits in with that at NexGen. And so it's probably why it took us 12 months to find him, because it's a little unique, and we're looking for that good fit, and we think we've found it with Tony.
Well, it's good to see from an investment standpoint too, because obviously the topic of M&A comes up a lot, and I'm sure you get a ton of questions about NexGen as a target. So I think it's important for investors to see that, yes, there is potential for NexGen to be a target, but you also have the capacity and the people to get this project up and running.
Yeah, and excellent point, Tina. That's right. I do get a lot of questions on it. When you've got an asset which will become the dominant asset in the commodity in the near future, it does draw attention from other mining companies. But look, we try to uncomplicate it by doing exactly what you said, Tina. We've got the financing ability to take it into production. We've got the technical ability to take it through development, permitting, and into production and reclamation and closure. And so if that M&A does amount to something material and a transaction, by having that ability to do it ourselves, it normally generates what the right price should be if it was to be acceptable to us. And so it's good to have those in the bank and demonstrating that ability if that type of attention was to materialise.
Mm-hmm. And you mentioned, obviously, the government's been pretty supportive of the project. Recently, they announced a $2 billion economic and infrastructure boost into the province. Can you talk a little bit about that and how you're expecting that to affect NexGen?
Yeah, look, COVID's been devastating, not just on a health front, and to any callers, anyone who's suffered it or have lost a loved one, my sympathies, and all of us from NexGen, our sympathies. It's also had a devastating economic effect, and Saskatchewan hasn't escaped from it. And so, I've been in constant contact with the Premier and conveyed to him that, during this period, people working from home and in isolation, we haven't put our pens down. The NexGen team have been looking at, well, what can we do to come out of the gates quickly once the work environment returns to normal, in order to help the economy, Saskatchewan, Canada, to get back up on its feet as quickly as possible, and work with our industry colleagues on that front. And so that's the perspective we're taking. We immediately got focused on it, and I think in light of COVID, government policy is going to be looking for opportunities to generate economic capacity, and we will be doing that, no doubt, but we'll be doing it in a completely environmentally and community-minded, sensible manner as well, which we have demonstrated for the last 7 years since the company was incorporated. Mm-hmm. So I think what you're going to see is industry like NexGen really doing their part to see, to help the government, to help the population, not just waiting for the government to sort of set it up and rely on the government. We're taking the responsibility ourselves to be that company that can help lead out in partnership with the government. And I got to say, like Premier Scott Moe, I think he's an outstanding leader on many fronts. And we have Brad Wall on our board, the former Premier, as well. So we're privileged, frankly, to be in this position to be able to help so many people. And it's something, as I said earlier, we live and breathe. And I think you see NexGen at its best when we're challenged the most. And this challenge has been presented not through our own doing, but we're more than willing to take it on and do what we can.
Yeah, for sure. I think it's important to address one of the questions that came in from the audience about insider buying. Maybe you can speak to that a little bit. And I'm not sure if it was clear about the 30 million financing, but the relationship between Queen's Road and NexGen.
Yeah, sure. So in terms of the relationship between Queen's Road and NexGen, Warren Gilman is on our board. He has been since 2017. He was formerly Li Ka-shing's investment platform which was the initial investment into NexGen. And he's still very closely aligned with Lee Kao-Shing and CEF Holdings. Queen's Road Capital was an opportunity for these Australian billionaires to also leverage off Warren Gilman's extensive experience in successfully investing in the mining sector. And so they're very closely aligned. Warren understands the investment thesis from CEF very, very well, and was very excited to put $30 million US into our company at this stage, even though, as you said, we'd had some reasonable share price performance over the last month and a half. So that is incredibly encouraging, and Warren knows this opportunity inside and out. With respect to insider buying, I can speak for myself. I've bought over the last 12 months thereabouts about 1.25 million shares. So I think that speaks for itself. With respect to my commitment to the company, Travis is the same, and a number of the other directors. But for myself, I think buying 1.3 million shares over the course of the last 12 months, I think really does emphasise where I can tell you now I'm overweight NexGen, that's for sure. But I'm quite comfortable with it. I'm happy with it, and that won't be the end of it either.
Yeah, that's great. I'm overweight too, so make me some money, Lee.
Yeah, pressure. I might go with good hands, Tina.
So we're coming up on the hour. I just wanted to ask one of the other questions that came in from the audience. Travis answered a lot of them, so you can refer to the Q&A box. But in terms of entering long-term contracts, where do you stand on that?
Yeah, I might just answer the first part of this and then hand over to Travis. We think the price discovery of uranium's got quite a bit to play out first. And so when we're also in parallel with the feasibility study and the environmental impact statement, we've always had the perspective of getting that completed first before we entered into long-term contracts. But we also think on the marketing side, we think the uranium price has a bit of a period to play out and a bit of price discovery first before we were to undertake that type of activity. Travis, have anything to add there?
Yeah, I would just say that's exactly right. And I think, from our perspective, we're not concerned about signing those contracts when the time's right. I think the reception from the utilities has been really strong for this project to go into production. Obviously, the jurisdiction is a diversifying feature. The technical simplicity of it is a risk mitigation tool. So from if you put yourself in an end user's position, seeing an asset like Arrow coming online at this time is something that is very appealing. And so you're in control as a utility in incentivizing us to go into production, and that reception's been very, very warm. So I know some people like to say like, oh, you might miss the contracting window or anything like that. We don't view it that way whatsoever.
Right. And just another question from the audience in terms of securing CapEx, I guess, for project financing, what are you expecting? What percentage of debt to equity would you be looking at? And would you expect Lee Kao-Shing to commit more funds to NexGen? I don't know if you can talk about that.
Yeah, well, it's got a very fast payback, so that the project will, I think, 70% debt thereabouts. I think there's also some opportunities to get some additional debt, perhaps through utilities as a prepayment of material. So there would be a very little equity component in getting into production. The other aspect is I used to work on the other side of the fence in providing finance to these types of projects, so I understand it acutely, and it's not. We don't have it on our list of things that concern us. That is very well in hand, and Travis and I have basically putting together the foundation of successfully securing that finance. With respect to Li Ka-shing, he's stated very positively he wants to see this go into production. So all I'll say is that we've got a very strong supporter in CEF and Chong Kong that more than has the capability of financing this, but they have no legal right to be the ones who finance it. So we'll just have to watch that space.
Okay, great. Well, thanks so much for the presentation and for everyone for attending. And Travis and Lee, you'll be back on Thursday for our BYOB. We'll have a broader discussion on the uranium market with Craig Perry of ISO Energy and Warren Irwin from Rosso Asset Management. So should be an interesting discussion. There's been a lot going on, not only with NexGen, but with the environment, the US regulatory market, and it's an interesting time to be in this space. So looking forward to having you on Thursday as well.
Yeah, outstanding. Thank you, Tina and Deborah. Sincerely appreciate the opportunity today to appear on Adelaide Capital, and it's an absolute pleasure.
Thanks so much. Have a good one.
Thanks.